Good afternoon, everyone, and welcome to Blink Charging's first quarter 2021 investor call. On the call today, we have Michael Farkas, founder and chief executive officer, Brendan Jones, president, and Michael Rama, chief financial officer. I would like to take a moment to read the safe harbor statement. This conference call contains forward-looking statements as defined within Section 27A of the Securities Act of 1933 as amended and Section 21E of the Securities Exchange Act of 1934 as amended. These forward-looking statements in terms such as anticipate, expect, intend, may, will, should, or other comparable terms involve risks and uncertainties because they relate to events and depend on circumstances that will occur in the future. Those statements include statements regarding the intent, belief, or current expectations of Blink and members of its management, as well as the assumptions on which such statements are based. Prospective investors are cautioned that any such forward-looking statements are not guarantees of future performance and involve risks and uncertainties, including those described in Blink's periodic reports filed with the SEC, and that actual results may differ materially from those contemplated by such forward-looking statements. Except as required by federal securities law, Blink undertakes no obligation to update or revise forward-looking statements to reflect changed conditions. I will now turn the call over to Michael Farkas, CEO, Brendan Jones, president of Blink Charging. Go ahead, Michael.
Good afternoon, everyone. Thank you for joining us. We had a solid start to 2021. First quarter revenue grew 72% compared to the first quarter of 2020, and we continued to aggressively expand the geographic footprint of our chargers. During the quarter, we made tremendous progress with 1,597 commercial and residential chargers contracted, sold, or deployed, and the number of Blink-owned charging stations contracted deployed grew more than 370% compared to the same period in 2020. Our target locations are high-density, high-volume venues like hotels, multifamily residentials, and healthcare networks. We are also working with a broad range of countries, states, and municipalities to strengthen EV infrastructure as more individual drivers, as well as fleets, transition to greener transportation. EV use is gaining traction worldwide, and in the U.S., the transition is being aided by favorable legislation initiatives from the Biden administration. In fact, as many of you know, in early April, the White House published its infrastructure plan, with, among other initiatives, proposes a $174 billion investment for the electrification of cars and trucks, and also proposes to establish grants and incentive programs to build a national network of 500,000 EV charging stations. With these efforts to get more EVs on the road, it's logical that demand will increase for fast, accessible, and reliable charging stations to fuel these vehicles. While EVs are currently a relatively small portion of the vehicle market, they represent a rapidly growing segment of the transportation sector. As a leader in the EV industry, we are well positioned to play a key role in the infrastructure build-out necessary to support the anticipated growth in EV transportation. And we are already actively pursuing opportunities at the local, state, and federal levels of government. It's important to remember that we are a pioneer in the EV charging space, with a great deal of experience in deploying charging stations in locations that are accessible and convenient, while also providing the technology that ensures a fast charge. We are focused on our operator-owner model, where we enter into long-term exclusive contracts with automatic extensions that employ a revenue-sharing model in which we receive payment each and every time a vehicle is charged at one of our Blink-owned locations. With this structure, we have the potential to generate a valuable recurring revenue stream for many years to come as EV utilization increases. Our property owner partners also benefit from this model because we take care of the installation and maintenance of Blink-owned units, which is often an attractive option for property management companies who have a lot of other responsibilities on their plate. Additionally, in our own and operate approach, we have exclusive long-term contracts, which allow us to deploy charging stations today, but most importantly, to add chargers to these contracted locations as necessary to meet demand. And that is through long-term, again, very long-term and exclusive contracts. This is a very exciting time to be a leader in the EV charging industry. Even before the recent announcements from the White House, we believed and continue to believe that the transition to EVs represent an opportunity with tremendous potential for our company's growth. As we've noted in previous calls, but think is important to point out again and again, Bloomberg's NEF electric vehicle outlook, which looks at the global EV market, noted that passenger EV sales increased from 450,000 in 2015 to 2.1 million in 2019, and are expected to reach over 50 million by 2040. Bloomberg NEF also expects that more than 50% of new car sales globally will be EVs by 2040, and projects that the need for charging stations will top 290 million by 2040. Again, 290 million charging stations needed globally. We're not even in the beginning of the first inning as to the amount of deployments that are necessary. And by the way, that has a value of over $500 billion worldwide. The shift to EVs is happening, and Blink is poised for significant growth as we play a key role providing the infrastructure to support this transition. To support our growth, in January 2021, we completed a successful equity raise of $232 million, significantly strengthening our balance sheet. With a stronger capital structure, we are better positioned to expand Blink-owned charging infrastructure, improve internal systems, operations, and technology, and to prepare for anticipated exponential growth, securing new partnerships, acquiring new locations, and continuing to seek strategic acquisition opportunities. As a key contributor to the expanding EV landscape, we are continuously looking for opportunities to strategically increase our global assets while also making EV charging more accessible. As such, we are very excited about this week's announced acquisition of European EV charging operator Blue Corner and its portfolio of 7,071 charging ports, giving Blink complete operational control of Blink Corner and its EV charging assets. The acquisition is part of our broader strategic international expansion plans and provides a significant infrastructure footprint in Europe. Blue Corner chargers are located across Belgium, Luxembourg, the Netherlands, and France. EVs enjoy a much higher market share in Europe. It's heightening the potential for the increased utilization for our EV charging stations. In addition, the historically higher price of fuel in Europe makes driving an EV a much stronger value proposition for drivers there. To facilitate our further expansion in Europe, we've also created Blink Holdings, a new company headquarters in Amsterdam, and we're excited to immediately establish a significant presence in Europe, supporting the international expansion that is fundamental to our growth, and we believe this acquisition will accelerate the success we are already achieving in Europe. Finally, we are excited by the opportunities we are seeing in the marketplace, and during the first quarter, we strengthened our capabilities for capitalizing on these opportunities by strategically adding new positions and people to improve our operational strength across the organization. Perhaps most notably, we added our new CTO, Harjinder Bhatti. He is a founder of ChargePoint, one of our biggest competitors, and he's a seasoned renewable and EV charging executive who will focus on the aggressive development of the company's product lineup, the technology infrastructure, and just bringing up everything within our portfolio up to the next level. Additionally, we made 17 new hires across the organization, including the technology, sales, IT, and customer service departments. We are also expanding our facilities in advance of anticipated growth, and at the start of the quarter, we announced the purchase of a 10,000 square foot office in Miami to house our corporate headquarters and to support our current and future growth. Also, at the beginning of the first quarter, we opened a new Phoenix location, which has already begun making meaningful contributions to our operations. Blink is off to a strong start and solidly positioned to drive growth. And as we move through the balance of 2021, we have amazing and exciting things ahead of us. And this is a very exciting and transformative time for Blink, and we're extremely optimistic about our future and our role in the growth of worldwide EV charging infrastructure. Now I'll turn the call over to Brendan Jones, president of Blink, to discuss some of our recent developments. Go ahead, Brendan.
Thanks, Michael. Well, good afternoon, everyone. It is a pleasure to speak with you today. We have been very busy here at BLNK, as evidenced by many of the recent deployments and developments within the company. I would like to review some of the highlights. To begin with, our latest news. We're very pleased to have acquired Blue Corner and its portfolio of more than 7,000 charging points. This acquisition provides us a solid foothold to access the European market, a underpenetrated market that has the potential to be a growth area for BLNK as the transition to EVs continues to progress. To provide some additional context, the European EV market is growing faster than the United States. Sales of plug-in electric vehicles in Europe rose 137% to 1.4 million vehicles last year, whereas the U.S. rose 4% to 328,000. These numbers are according to evvolumes.com. The surge in EV adoption will increase demand for EV charging infrastructure. In addition, European regulations are further accelerating widespread EV adoption with regulatory reform that supports zero emissions vehicles. Now, we haven't lost focus domestically. We are effectively leveraging EV infrastructure grants, incentives, and programs across the country, with some of the recent deployments including the deployment of 42 charging ports at 10 Four Brothers Pizza Inn locations across New York, which was made possible through the Charge Ready program from the New York State Energy Research and Development Authority, otherwise known as NYSERDA, and Make Ready incentives by New York utilities. Additionally, we upgraded 19 first-generation BLNK EV charging stations in Plano, Texas, to the company's IQ 200 fast Level 2 charging stations in support of the city's commitment to electrify their transportation infrastructure. The deployment of BLNK IQ 200 charging stations at Native American youth and family centers in Portland, Oregon, which was made possible with funding from the Portland General Electric Drive Charge Fund through the Oregon Clean Fuels Program and an electric mobility grant from Pacific Power Oregon Electric. Also, there was an incentive through Oregon Clean Fuels Program. We also recently added some valuable partnerships, which include, but not limited to, an agreement with General Motors to offer GM EV customers more seamless access to publicly available BLNK charging station sites across the U.S. as part of GM's Ultimum Charge 360 program. We also signed a reseller agreement with EV Transportation Services, otherwise known as EVTS, to distribute BLNK IQ 200M portable EV charger, along with its Firefly ESV essential service vehicle. We engaged in a sponsorship also with the University of Cincinnati's Bearcat electric vehicle racing team. This is the university's first all-electric Formula race team, and we're really excited about that. We continue to make progress internationally through agreements such as the first installation of a BLNK IQ 100 charger by the municipality of Pedro Aguirre Cerda in Santiago, Chile, to support the municipality's new fleet of Nissan Leaf vehicles. And in addition to that, we signed an agreement to deploy BLNK EV charging stations at Fatal Hotel Group locations in Israel. For some context, Fatal is one of Israel's leading hotel companies with luxury hotels in 14 major tourist locations. As Michael mentioned, we have made a lot of structural improvements to strengthen the company and capitalize on the interest and opportunities we're seeing in the marketplace. These improvements include expanding and improving our sales team, our service operations team, our product development team. We are now very well positioned to support the anticipated growth ahead of us. I'd like to now turn this over to our CFO, Michael Rama, to run through some of the specifics results for the quarter.
Thank you, Brendan, and good afternoon, everyone.
We are off to a solid start in 2021, with total revenue growth of 72% to $2.2 million in the first quarter of 2021 as compared to the first quarter of 2020. This growth was driven by increased product sales as well as increased network fees. Product revenues grew by over 113% in the first quarter of 2021 as compared to the same period of 2020. Related to the robust demand for our commercial and residential chargers. Network fees grew 100% as compared to the first quarter of 2020, related to the increase in chargers within our network. The growth in these two areas of our business was offset slightly by a decrease in revenues from charging services for the quarter. Despite the continued reopening of the economy, travel in general is still a bit constrained as certain pandemic-related restrictions remain in place, which impacts EV travel. First quarter 2021 net loss was $7.4 million or 18 cents per share, compared to net loss of $3 million or 11 cents per share in the first quarter of 2020. For the first quarter of 2021, net loss included increases in compensation and operating expenses related to the onboarding of new employees, primarily in our sales, IT, and customer service areas. Specifically, operating expenses for the first quarter of 2021 increased to $7.5 million from $3.3 million, primarily driven by significant scaling of our infrastructure and operations as we continue to scale the business to prepare for the anticipated demand for our products and services as EV use grows. Also contributing to the increase in operating expenses for the first quarter of 2021 compared to the first quarter of 2020 were operating expenses associated with the acquisitions of Blue LA and Yugo stations during the second half of 2020. As of March 31st, 2021, we sold or deployed 17,302 chargers, of which 7,191 were on the BLNK network, which consisted of 4,471 Level 2 publicly accessible commercial chargers, 1,441 Level 2 private commercial chargers, 121 DC fast charging publicly accessible chargers, 11 DC fast charging private chargers, and 1,147 residential Level 2 BLNK EV chargers. The remaining are non-networked on other networks or international sales or deployments, which consist of 225 Level 2 commercial chargers, 6 DC fast charging chargers, 9,218 residential Level 2 BLNK chargers, 607 sold internationally, and 55 deployed internationally. And now a few comments about our liquidity and cash. At March 31st, 2021, cash and marketable securities were $232.2 million compared to $22.3 million at December 31st, 2020. During the first quarter of 2021, we completed a successful equity raise of $232 million. Now I'll turn the call back over to Michael Farkas for some additional remarks, and after that, we'll open it up for Q&A. Michael?
2021 has already been a busy year. We are energized and prepared to capitalize on the opportunities we're seeing to grow our role as a key contributor to the establishment and expansion of worldwide EV infrastructure. This is an exciting time for our company and our industry, and we look forward to driving continued growth and progress. With that, we will now open the call for questions.